folks, the Chinese stock market is going absolutely insane once again today. Chinese stocks are going insane, and there's a lot I want to discuss in this video. I want to explain what exactly is going on there. I want to talk about how this can affect the United States stock market and those stocks specifically in the States as well, and kind of get into this in depth. Now, I didn't prep a slide for this first part. I just want to share with you. And this is a very important thing to remember in the stock market and dealing with stocks, right? Let's say you're going through a moment where there's just a ton of selling pressure on. Let's just talk about a specific stock. Let's not even talk about an index. Let's just break it down to a specific stock, right? Let's say everybody wants out of Apple stock for whatever reason. So people are selling it off, day after day, week after week, right? Eventually, so many people sell off of that stock, the selling pressure starts to subside and starts to subside more and more, right? Volume starts dropping, and it just starts getting harder to find sellers because essentially there's not as many people want to sell it, right? And so there's not that crazy volume. So volume starts to dry up, and it's just not a lot of folks a lot of the people that wanted to sell Apple stock already sold the stock, right? So then you have this scenario where, let's say all of a sudden there's some excitement around Apple and you got some new product coming out, and all of a sudden, next thing you know, everybody's like, I want Apple stock, right? Well, the problem is there's like hardly any selling pressure on that stock, right? So which means the buyers have to bid up that stock because there's hardly any people want to sell it, right? And you got a massive amount of people that want to buy the stock, and next thing you know, Apple price is going up and up and up, right? That's the stock market 101. If you get way more selling pressure on a stock than buying pressure on a stock, then that sets up a situation where the stock price goes down. If you have way more buying pressure than selling pressure, then you have to bid it up, and you're just competing in that market. Same thing with real estate. Let's say it's a house, right? And let's say there's a scenario where you only got one potential buyer. Well, shoot, they could probably talk you down a little bit on that house. However, let's say there's 20 potential buyers. They're going to have to bid that baby up. That's exactly what we're seeing in the real estate market when you hear about these homes go, over ask essentially. That's the situation, right? There's too much buying pressure and there's only, one person over here selling, right? So it's an important concept to remember when you have gone through a market that's been devastated. And when it comes to the Hong Kong stock market, yeah, that stock market has been devastated. It was in a vicious bear market, and it just had been kind of a disaster zone for a bit, okay? Now, yesterday, this index went up 9%. Crazy day, okay? That's the best day since October of 2008 for the Hang Seng Index. Absolutely insane. But what's going on today? Well, let's go ahead and take a peek. Well, first off, this was Chinese stocks. I just want to show you this. This was Chinese stocks today, okay? 36%, 33%, 25%, 40% for JD, like ridiculous, okay? But then you would think, okay, that has to be about it, right? No. Here we go. The Hang Seng Index is now up another 5% plus today. 5% for an index is ridiculous, okay? 9% is just on a whole other level. Like, we had to go back to 2008 to have that strong of a day. 14 years we had to go back in time to find that strong of a day. And then you would think, okay, after a 9% move, this index has to either maybe stagnate for a day or maybe even downtrend, and then it goes up 5% plus. That's just like, emoji of just like that's ridiculous. And here it is, back-to-back insane days. The Hang Seng Index in the last 2 trading days is up over 15% now. Over a 15% move in a 2-day span. You got to be flipping my flapjacks, okay? That index has just gone absolutely insane. And it's just obviously a massive influx of money. Now, what's going on there? Well, there's a few things at play here that's going on, okay? The first has to do with the Fed, right? Now, there's rumors that sometimes whatever the Fed's going to do or say gets out there to people before the Fed actually says it or does it, okay? And it doesn't surprise me at all. And so, nonetheless, I think folks probably knew what Jay Powell was going to do here today. They probably already had that information. And obviously, the stock market bid up in China yesterday, right? And bid up more into today. The Federal Reserve announced their first interest rate hike in more than 3 years. See 6 more ahead. It was a 0.25% change. Nothing major there. So that was kind of like, oh, yeah, okay, cool. Better than folks feared, because some people thought, oh, maybe it'd be a 0.5%, maybe more than that. And those sort of situations kind of freak out the market when it's kind of like a lame raise like that. It's not really going to affect much, right? So the market's kind of, okay, sweet, okay? Also, the Fed basically says they're not even really that very worried about a recession scenario. Obviously the market's really worried about a recession scenario. You hear that on obviously YouTube all the time. The amount of recession videos, I don't even know how to explain it. The search term recession's gone up massively, but the Fed's actually not very worried about that, which is interesting. What's going on there, right? Saudi Arabia considers accepting yuan instead of dollars for Chinese oil. Now, I think we're going to get into the numbers here in just a moment and kind of, the percentages and things like that. But I think a moment like this is just bigger from the context of, it's kind of like almost more of a philosophy side, right? And think about it from a psychological side of like the fact that Saudi Arabia would consider this almost like at least seems like it puts a dent in the dollar, right? Where it's like, wow, Saudi Arabia is really considering taking, Chinese money, let's just put it that way, instead of dollars, right? And so I think that's the biggest thing when it comes to that, just that psychological side of like, wow, Saudi Arabia is really considering this. Could the yuan replace the dollar over time? And, maybe that's realistic, maybe that's not realistic, but the fact that it's a consideration is major, right? The Saudis are angry over the U.S.'s lack of support for their intervention in Yemen's civil war and over the Biden's administration's attempt to strike a deal with Iran over nuclear programs. Saudi officials have said they were shocked by basically the U.S. withdrawal from Afghanistan as well. China buys more than 25% of oil that Saudi Arabia exports. Huge number. China buys more than 25% of the oil Saudi Arabia exports. That's a crazy number. If priced in yuan, those sales would boost the standing of Chinese currency. The Saudis are also considering including yuan-denominated futures contracts, also known as petro yuan, in the pricing model of Saudi Arabia Oil Company, known as Emiraco, which you can actually invest in if you want. And so obviously a moment like that is big. It's big from a dollar number, because when you talk about this, it's not like it's a small amount, but like I said, it's just bigger from a standpoint of could the yuan ever replace the dollar? And that's a whole debate I don't want to get into right now, but at the end of the day, we can't not acknowledge that at least matters. And it's a more positivity, right? Now, speaking about oil, also oil has dropped off a cliff, right? And so that's obviously good for not only the Chinese stock market, but the U.S. stock market as well. It was a fear that, to be honest, all the experts in the stock market and the commodities market all expected oil to continue to rise and rise and rise, right? If I went back a week ago in time, today, and I asked people, oil 150 next week or oil 96 next week, 99% of people, if not higher than that are stock market experts or commodities experts would all say 150, right? Because it's a trend. It's like it's going up, and then you got all this drama. You're like, oh, it's going to keep going up. And that's just not the situation at all. And oil's dropped like a rock now in a matter of a week. Like literally, it peaked out a week ago today, and now it's just kind of chilling there. So that's good news for the U.S. stock market, for the European stock market, and it's good for any stock market. It doesn't matter if you're in China, Europe, anything in general. That's good news. Okay. Now, obviously, all this is affecting the U.S. stock market positively, right? NASDAQ had a massive day, 3.7%. SPY's up 2% plus. Dow Jones up 1.5%. Russell up over 3% there. So great news, and after already a pretty good previous day as well. So kind of like back-to-back good days. Now, in terms of, obviously, the stock price moves, it was massive. This is just some of the stocks I own. Look at this, 13% STC, 13% beyond. And this is after yesterday was already a great day, right? Corsair 11%, Voyager 10%, Oatly 9%, Win 8%, Revolve 7%, PayPal 7%, Tattoo Chef 6%, Honest 6%, Meta 6%. These moves just one after another, just insane, right? If I pull up I got a watch list that's retail trader, investor type stocks, right? That are popular in the retail crowd. Skills 27% today. Wish 17%. Hood almost a 16% move. Fubo almost a 14% move. DraftKings 13.5%. Teladoc 11%. RealReal 11%. Look at ARK today. ARK alone was over a 10% mover. That is insane. I haven't seen moves like this since March of 2020, in terms of whiplash type moves, right? I have not seen this since March of 2020 in terms of back-to-back days, this insanely strong, where you're seeing like countless stocks, 5, 10, 15, 20% back-to-back days. That's the thing, like the previous day was a great day as well. Now, never mind if we somehow got a third straight insane day, right? That would just be at a whole other level. But I haven't seen this type of whiplash really since March of 2020. It's just an insane move. And like I said, when it comes to these stocks and you've had this massive flush out of sellers and just that insane selling pressure on these companies, right? Shoot, if you just get a little excitement coming in, a little buying pressure, the moves are epic. And that's exactly what you're seeing right in front of your eyes, where the stocks are going up 10, 15, 20%. And a lot of these stocks just don't have sellers. They just don't have much selling pressure at all. And so if you want to get in these plays, you're having to bid it up, right? And that's just kind of what we see playing out. By the way, get my free course down there. That's a great course for anybody that's kind of in the market for less than 2 years. Check that out. It'll be pinned comment down there, okay? So let me kind of give some of my perspective on this, okay? Now, how do I look at a market like this, right? Well, first thing I like to realize in a market like this is the indexes have been damaged heavily since basically November, right? NASDAQ, Russell, the worst. Now, Dow, S&P didn't get hit nearly as hard, mainly because Apple held up well, Microsoft held up well, and oil and gas stocks held up well, and a few others. And that's why those indexes only went into correction and not into bear market, while the NASDAQ and the Russell both went into bear market. So first thing I like to look at is I say, okay, the markets have been heavily damaged, so they got a long way to climb to even get back to where they used to be. That's the thing. It's a long climb just for the Russell and for the NASDAQ to get back to where they were when they peaked in November. That's a long climb. That climb can sometimes take months or maybe even potentially a year or two. So that's the first thing to kind of realize is like we've got a long way to go just to get back to where we used to be. Never mind talking about records after that. Just to get back to where we used to be, okay? Next thing I like to break it down to is I like to look at these stocks, right? And I say, okay, in order for a lot of these stocks to get back to where they used to be, a lot of these stocks would have to double up, triple up, quadruple up, 5x just to get back to where they peaked at in 2021. And so with a lot of these stocks, that's not happening this year, right? They'll maybe potentially happen in future years if their businesses actually execute. Some of these companies are not going to make it, right? Some of them aren't good companies. Some of them are good companies. But even the good companies, right, the ones that really have it, like really have that revenue growth over the coming years, are really going to flip to profitability and then rapid profitability. Those sorts of stocks, it's still going to be a while before they get back to their, let's call it 2021 highs. They still got to prove it out quarter after quarter after quarter with market momentum to get back to those old highs. So that's the next thing I think about is like, don't get too hyped on the moves, because you got to remember a lot of these stocks are still down significantly. And if you get too hyped on the move, a lot of times what you can lead into is buying uncontrollably, or even worse is not buying at all, because you're like, well, yeah, the stock just went up 20%, so I shouldn't buy it anymore because it went up 20% and it might come back down. It's like, let's say it's a stock like, I don't know, Corsair. That's a good stock to use because obviously that's a beaten down stock. That's a super profitable company that's established and great brands, right? A Corsair Gaming, CRSR. So CRSR goes from, let's say, 17 to 20, huge percentage jump there, right? You say, well, oh gosh, that's a huge percentage jump, so I don't want to pay 20 now. And it's like, well, dude, what do you see in Corsair? Are you expecting that stock to go back to 40, 60, let's say $80 someday? Let's say 5 years out, 3 years out? At 20, it's still a steal deal. Just because it went up in the short term doesn't mean anything. It's also down massively over the past year, right? You got to look at the valuation, the PE, the forward PE, those sorts of things. Don't get too caught up into this whole like, well, it went up a little bit, and like that doesn't matter. If Corsair is a $60 stock, it doesn't matter if you bought Corsair at 18, at 20, at 22, at 24, at 1750. Like none of that ends up mattering in the end anyways. All that matters is you bought the stock, right? That's all that matters. Yeah, you want to buy as many shares for as cheap as possible, but at the end of the day, if you got a steal deal right in front of your eyes and you say, I don't want to buy that steal deal because I might get a better deal tomorrow, it's kind of a silly way of investing, right? If it's a better deal tomorrow, then shoot, you can always take advantage of that deal, right? And always dollar cost average. And if you're in a strong position to invest, which is a position where you have excess money at the end of each month, then you are always in a position of power in the stock market because you are always ready to buy stocks every single month, right? That's very, very key what I just told you there, okay? The next part, this is a pretty big one. I want to make sure I explain this properly. So when it comes to me in the stock market and kind of how I think, right? I always put myself in a huge position of power in the market, right? So, even though the market's starting to bounce back huge and might continue to, I don't get too excited or even down about that, to be honest, because the way I look at it is, okay, stocks go down. Let's say for the rest of 2022, let's say for this entire year, just stocks go down, down, down. Okay. The way I look at it is, okay, that's more time for me to accumulate more shares of ownership in companies I love for the next 3 to 5 years, right? In companies I love, that I believe in, that I believe their revenue is going to go up and they're going to get to profitability. If they're not profitable, and if they are profitable, they're going to be much more profitable in 3 years from now, 5 years from now than they are today. Much higher revenues based upon all the research I did with that company, right? In kind of forecasting and those sorts of things. So that just gives me more time to accumulate more shares. Now, if that's not the situation, the market goes up, cool. I just make a bunch of money, right? You know, today was a 6-figure plus day. Yesterday was a 6-figure plus day in the market. It's like, cool. If that happens, oh, cool. We'll keep making, 5-figure, 6-figure type days. Awesome. And if it doesn't, that's just more time for me to accumulate more shares in the market. And that's how I remain so calm in the stock market all the time, which is a place where a lot of people are freaking out all the time. They're like, oh my gosh, I don't get tied up into all that. And all that's just side conversation. If people want to talk about, oh, you're down so much today, you're down so much in the past month or since November, it's like, okay, cool. I get to accumulate more shares of companies I love for the next, 5 years on the cheap. And for me, that's nothing. And for a trader, for traders that are in and out of stocks all the time, in and out of the market, trying to reposition in the market, they're always trying to play that game, right? And they have to feel like they have to win today. For me, I don't care. I don't have to win today, right? I take like a sports philosophy with me, right? Which, let's say, like when I used to train for track, right? I was a 200-meter sprinter. I didn't have to win every sprint in practice or something like that. And if I wasn't racing that day, it didn't matter. I'm just practicing, right? And I'm just getting better. I'm getting stronger. I'm getting faster. And that's the way I look at it. When the market's down, you're just strengthening yourself. You're just buying up more shares of companies that you love for the long term, accumulating those shares and adding more shares and more shares and more ownership. And as you increase the more shares you own, your ownership continues to go up and up and up in that company, right? And so as long as I'm right where that business model is going over the next 5 years, I'm going to end up making a ton of money in that stock, and the stock price will be reflected. So in the short term, I don't care. I don't have to win today. My game's played over the next 3 to 5 years. Whether I lose over the next 3 to 5 months means nothing to me. If my stocks go up in the next 3 to 5 months, cool. My account balance just says a bigger balance. But with a lot of companies, it's not even like I'm going to cash out of them if they go up a bunch, right? If Tattoo Chef goes up 50% over the next 3 months, I'm not cashing that stock. It doesn't mean anything to me. That's just chump change from what that stock will go up over the next 5 years, in my opinion. If Corsair Gaming goes up, 50% over the next whatever amount of months, 5 months, cool. My balance says a much bigger amount, right? But it doesn't matter to me because I'm not selling that stock at then. If Honest goes up 50% in the next 5 months, it doesn't mean anything to me. I'm not selling. So I don't have to like win the battle today. All I'm focused on is winning the war. So many people like to get caught up into the winning the battle, right? And you got to win today. And it's like, it's not the way this works. You got to worry about the next 3 to 5 years. The people that are worried about the next 3 to 5 days, the next 3 to 5 months are always the ones that come out on the bottom in this game. It's been proven statistically over time. Those folks that are trying to get in, get out, position, oh, got to reposition. Oh, I'm taking too much risk here. Oh, I got to go over here to these stocks. Oh, shoot, energy's hot. Let me go over the energy plays. Oh, energy's not hot. Let me go over. No, that's not how you play this game. You stay disciplined. You see a stock that's a great price. You buy the stock. You throw it in the filing cabinet. The next month, if it's a lower price and you still love that company just as much, if not more, you buy more shares of it and you increase your ownership bigger and bigger and bigger. And you keep an eye on your companies, those conference calls and things like that. Make sure they're on pace to do what you want that company to do over time. And as long as that's all that ends up mattering in the end. And what that stock price says in 3 to 5 years from now, not what it says in 3 to 5 days from now, not what it says 3 to 5 weeks from now, not what it says 3 to 5 months from now. What it says 3 to 5 years from now, that's all that matters in this game. And the rest is just conversation. And always remember those things, guys. All right, much love as always. Hope you enjoyed this video and have a great day.